What's going on, YouTube? Back with another one. Wanted to consolidate the account. So last time you guys saw this, I had the wheel account where we were wheeling Robinhood, but now I'm not looking to do that anymore because it's been tough, and honestly, it takes a lot of time to run cash secure puts and covered calls. So for now on, I'm just going to consolidate the accounts, which I've done already. So you can see the bigger account with the smaller one already in one place. And I'll just do portfolio updates on stuff that I'm buying, stuff that I'm selling, what I think of the market. I think that's a better way going forward without me having to stretch myself thin, trying to do covered calls, and it was just a lot. I mean, this environment is just a little crazy right now too. We're actually back to all-time highs, and we were close to all-time highs in the portfolio as well. And I'll do a brief breakdown on my positions on this other portfolio too, just so you guys have an idea of what I'm invested in. But we had an all-time high of 165 back in January 29th. And the percentages are kind of misleading, I would say, because I keep adding money to this, I keep taking money away. So don't really look at the percentages as much, but look at the dollar amount. So 56 grand there on the year. And then we were at 54 grand on a couple of days ago. So super happy so far. And let me explain how I got here on this portfolio. And I'll do a bigger breakdown, another video where I'm spending like 45 minutes to an hour reasoning why I picked those positions. But my main strategy is going with leaps and individual stocks for tech companies that I think are undervalued at good times. So I wish I had actually had more cash to buy this dip, which was actually March 30th was the last day. That was probably the bottom. And I wish I had more cash, but I was actually fully invested at the time and had cash tied up in other accounts. But talking about the leaps, I have an Amazon expiring on January 2027. So a good little tip here is 6 months before your leap is expiring, you start thinking about selling it or even exercising that leap. And I would warn you about exercising it because you're going to lose a lot of the extrinsic value. So let's go into Amazon right here and I'll show you what I'm talking about. So whenever we look at the Greeks, let's scroll down a little bit more. So these are the Greeks, and they dictate how the option's priced and how your contract's going to move. I want to say theta and delta are the most important to understand. And this one, theta, for example, represents how much my contract loses in value every day. So in this case, we got 0.02 times 100 because an option contract carries 100 shares. So we're losing $2.69 every day that we hold this contract. And the delta represents our exposure to the underlying. So in this case, we actually have exposure to 96 shares of Amazon for a lower price than it would be for us to go and buy 96 shares at whatever price they're trading at. So for example, in this case, 96, and just doing some rough math here, these are not going to be exact numbers, times 255, I would have to deploy 24.4 to have exposure to 96 shares. But in this case, I'm able to buy a leap that's worth $11,000. And I actually bought this for 9,250 a couple of months ago, or actually longer than a year ago at this point. And this is just a good way to go long an underline and have a little bit more leverage than if you were to just buy shares outright. So a good way to think about this is your deltas. So like I mentioned, you have a 96 delta of exposure whenever you hold this contract for a number of amount of money that you paid for it, right? So a good way to think of this is just in deltas. So let's say you hold one share, you hold one delta. Let's say you hold 100 shares, you have 100 deltas of leverage in that position. So I'm not gonna dive into the into super deep. This is just I wasn't ready for all this. I would need some more stuff to show you guys what I mean. But this is one of my longs, one of my leaps expiring in January. So come June time, I will start thinking about either selling it or rolling it out. I'll probably sell it. At this point, I'm very over indexed on leaps. I try to have 20% to 30% of my portfolio with Leaps. And at where we're sitting right now, we're actually at around 40 to 50%, I want to say. And it's a good problem to have because at the end of the day, these have run up a good bit. So we just saw Amazon, we saw a 30% return, give or take 28.2. With that AMD call, this still has a lot of room to go, but we're already at 34% total return. And with Meta, this one's my biggest one. We're at 12% total return. And I'll get my face out of here. But as you can see, these expire in January of 2028. So we have a lot of time for Meta, Amazon. Well, Amazon expires in 2027, but we have a number of years until this contract's at assignment or a due date. So we can let it run. At this point, I'm not looking to sell it. We actually had a pretty big red day here for Meta, negative 2%. And not sure what happened, but these are kind of the core positions of the portfolio when it comes to leverage positions. So going along with Leaps, I think it's a great strategy for you. It's a very capital efficient. I think you should do some more due diligence than just watching my 30-second explanation on Leaps. I did do a video on how options work a couple of months ago. I should do another one, but I like going along with Leaps. I hold a little bit of crypto in here, nothing crazy, just so I have some exposure, really, and individual stocks. So you guys have seen my Netflix position. My Google position is one of my largest, just behind my Meta Leaps. I hold 134 shares at a 165 basis. And I bought this really aggressively last April, whenever we had Liberation Day. So this position is actually just a little over a year old. So super happy with these returns. And this is what happens whenever you buy quality companies at a time where everybody's scared. I've been talking about this for the last couple of weeks, but we might not see another good buying opportunity this year. And I don't know what will happen. I cannot predict the future. But whenever you see opportunities like this, I think you should go long. And I think you should start buying up some of these tickers that you would like to own. So we've seen Google actually take a small dip this last month. As you can see, we're trading at 273, which is a fair price for Google. Now we've had somewhat of a recovery. We're up a little bit now in the last month. If you had just bought, not even at the bottom, but if you just bought March 23rd, which was all the way down, and let's say you were buying and buying and buying, and you just held for a month, you already saw 11% return. And we're not even at all-time highs yet with Google. Let's see on the past 3 months, not as aggressive of returns because March 30th was only like a week or two ago. So I've been preaching this, guys, but whenever you see opportunity, I think you should pounce, and you shouldn't be super scared of things never going back up. This is what the media tries to tell you, and that's why I stay away from going on Yahoo Finance so often, or CNBC or MSBC, whatever it is, dude. Like, they're all doom and gloom. It just doesn't matter. You just got to buy quality companies at a dip and you're going to win. So I'll show you my account all the way down from 165, January 29th, all the way to 123. So this was pretty painful, and you have to have the balls to not sell your position. I was actually down more than 40 grand from all-time highs for my portfolio of 165 all the way down to 123. That's 40 grand, guys. This is a lot of money for me still at this point, but you can't just panic sell. You just have to buy more and believe that your thesis is right, and that all of these bad news are just going to blow over, because a lot of times they do. And look at this point, we're actually back to all-time highs on the S&P 500, and those that bought the dip March 30th benefited from that. So Google being my biggest single stock position, Netflix coming in second at 82 shares at around $86 basis or so, or $87 basis. Let's check it out. This one is a smaller position. Like I mentioned, I'm going long Leaps. I actually just transferred these shares from the other accounts. They're actually just buffering here on my average cost, but it's around $86 or so, nothing crazy. And what else? We got Microsoft, and then I'm going long Microsoft with MSFU, which is a double leveraged MSFT underlying ETF. So I get a little bit of more exposure to Microsoft. Microsoft is actually having a good bit of a recovery, and this position was down 25% not that long ago. but you just have to understand that whenever you're buying a triple leverage or a double leveraged ETF, this thing's going to move like crazy. But you have to understand that if your thesis is right, if you do your due diligence and you have enough patience to let the underlying recover, you're going to win. So we're actually seeing a little bit of a recovery even on the week. Check this out. We're 27% on the green for this right here on MSFU. 27.8%. Let's check on the month, 14%. I should have doubled down and bought more, but honestly, I was already exposed a little bit too much to Microsoft. I try to not have more than 20% of my money in one individual stock. Google's a rare exception because we saw 106% return at this point. So that one's a little bigger. But at this point, it would have been a good problem to have if I doubled down on MSFU and I saw a 23% return on the week. But if that wasn't the case, I don't want to have to hold the bag. I used to trade triple leverage ETFs back a couple of years ago when I was in college, and I was actually holding the bag for, let's say, like 12 to 16 months. If you haven't seen my video on how we recovered from a big loss, go check it out. But Amazon following here, and then RVI, which is Robinhood Ventures Fund. And I actually just gave up on 100 shares of my Robinhood, which I'm kind of upset about because I got assigned on my covered call. And I actually had an 86 basis, so we would have been up a couple $100, like $700 actually. So anyways, wanted to show you guys this and a little update on where I want to take this account, this challenge, or whatever this is. I have a little bit of money here now. $7,500 of this is from that Robinhood covered call that got assigned. So let me know in the comments where you guys think I should buy. I'm still sitting on this cash, just letting it linger for a little bit. Hopefully you guys enjoyed the video. I want to see you guys win. If you guys have any questions or any feedback, drop it in the comments. Don't forget to subscribe and leave a like. I'll talk to you soon.